Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up over the next hour, lawyers sharpening pencils and arguments ahead of the Apple Epic Games antitrust trial. Set to begin on Monday. We're going to break down the issues at play and the consequences at stake. Twitter first quarter ad sales disappoint. Shares tumble. But that's not the whole story, says CFO Ned Siegel. His take on the company's latest earnings and opportunities for growth, including subscription services and audio chat rooms. And Disneyland reopens. California's theme park opening at about 15% capacity with a new reservations process in place. We'll take a look at the reopening process and customer demand. Those stories in a moment, but first, U.S. stocks dropping from a record as traders digested earnings, new inflation pressures, and hawkish talk from the Fed. Let's get straight to Bloomberg's Kriti Gupta with the picture. Kriti, walk us through this Friday.
Well, Emily, it's really been all about tech underperformance. It's really been whipsawing all week long with those big tech earnings. But look, we ended today's session really in the red. The bigger the tech stock, the more tech pain. And that's really what you're seeing right here. The S&P 500 down on the day. So risk sentiment was off to a bad start from the beginning. But then you really see that when you go to those big tech heavyweights, really in that New York FANG index, the selling got even worse. The exception here to that more selling, more pain issue was, of course, the semiconductors. But I want to take it back to those big tech stocks. Let's look at how they did on a week. Really, a lot of that pain was in Microsoft and Apple. You can really see Amazon, Alphabet, Facebook, all actually gaining on the week, of course, with those monster earnings beats. But let's take it to Apple, because similar to Microsoft's pain, on a 5-day chart, you can really see it's just been a straight shot down. It really tells you here that just because you were an outperformer in 2020, just because you were that haven bid, even those massive earnings beats, sometimes it's just not enough to make a stock go higher, Emily.
All right, Kriti, thanks for the roundup. Have a good weekend. Meantime, Apple and Epic, the maker of the popular game Fortnite, are scheduled to meet May 3rd in a high-stakes antitrust fight over how much Apple's App Store charges developers. Bloomberg's Mark Gurman and Olga Karif paint this preview of what to expect.
Apple and Epic Games are entering a trial that could impact the heart of Apple's App Store. The 15 to 30% fee that the iPhone maker takes from developers who charge for paid App Store downloads, as well as in-app purchases and subscriptions. This matter kicked into high gear when Epic replaced its payment system inside of its popular game Fortnite with its own payment system. That circumvented Apple's in-app purchase system, which takes the fee. That, of course, led Apple to remove Fortnite from the App Store. Hours later, Epic sued Apple, and here we are today. Olga, you cover Epic Games. What's their argument in this trial, and how do you think they'll fare?
So Epic argues that Apple has monopoly power in the iOS app distribution market. It argues that Apple locks developers into selling their iOS apps only through the App Store, and it forces developers to use its own payment functionality, and Epic would like to change all of that. Epic founder Tim Sweeney is going to testify and say this is unfair. And Epic is going to have a slew of witnesses, such as economists, who are going to say that Apple is just greedy and is, trying to take developers' money away from them. And a lot of legal experts say that Epic has a fair shot at winning, but even if it loses, it will probably win mind share of a lot of developers and consumers. And Mark, how do you see the Apple side of the story? Sort of what are Apple's arguments and what are their chances of winning?
Yeah, I mean, Apple's perspective is essentially twofold. One, there is a contract in place. So no matter how a developer feels, no matter how we feel or Epic feels about the situation, Epic, for all intents and purposes, does have a contractual agreement with Apple for that 15 to 30% cut that Apple takes from all other developers. So that alone, I think, gives Apple a potential leg up in this lawsuit, given the presence of contracts. Secondary, Apple says that their 15 to 30% cut is either lower than the industry average or is on par with the industry. Of course, that's arguable. There's a corner of people who say that the industry is only at that tier because Apple set the tier when they launched the App Store 10 years ago. But however, for Apple, there are billions of dollars at stake. Apple made an average of $120 million per year between 2018 and 2020 on revenue share from Fortnite alone. right? If Epic wins, or if Epic does make a solid argument in court and does develop developer mindshare, like you said, Olga, the floodgates could potentially open for other developers to have a backlash against Apple, sue Apple, fight Apple in other ways. And Apple made an estimated $20 billion in fiscal 2020 off of commissions from the App Store. So that is a lot of money at stake for the iPhone maker.
Bloomberg's Mark Gurman and Olga Kharif there, of course, will be following that trial starting on Monday. Sticking with Apple, EU regulators accusing the company of violating the bloc's antitrust laws. They also allege the iPhone maker distorts competition for music streaming by imposing unfair rules for rival services in the App Store.
App Store rules are a concern for many app developers beyond music streaming, because they depend on the Apple App Store as a gatekeeper to access users of Apple's iPhones and iPads, and this significant market power cannot go unchecked.
The charges underscore the long-running feud over app payments between Apple and Spotify. The popular music streaming service filed a complaint that sparked this very investigation. Meantime, TikTok finally has a CEO. The social platform has announced ByteDance CFO Shotza Chu will be filling the top leadership position after the departure of Kevin Mayer last year. Vanessa Pappas, who has served as interim head, was named Chief Operating Officer. For more, I want to bring in Bloomberg Shelley Banjo. So, Shelley, who is Shotza Chu? What do we know about him?
Yeah, so he's most well known for taking Xiaomi public, the Chinese smartphone maker, in one of the biggest tech IPOs of all time on the Hong Kong Stock Exchange last year. So he was the CFO at Xiaomi and then the international business head for them. He joined ByteDance just about a month ago.
So what kind of message do you think this sends about what kind of company ByteDance wants TikTok to be?
Well, what was great about what Chu did at Xiaomi was he basically created a company that was, or he helped kind of sell that company to the global markets and to financial folks around the world who were trying to figure out what this company is. And so that's kind of the hope for what ByteDance is. ByteDance has a messaging problem, right? They're like, it's a Chinese company that makes a lot of money but has this huge assets of TikTok that's global. And so the question is, can he now sell that to other investors around the world?
And how do we expect him to deal with the regulatory hangover? We don't know exactly what the Biden administration is going to do about TikTok, but we know that the Trump administration had a huge problem with it. Do you think that those issues are over?
No, I mean, I think that the Biden administration has come in and said, yes, we're going to put a pause on everything and we're going to study it. But it definitely is not, they're not free and clear. And meanwhile, they have this growth that is just, continuing on. But they're also trying to stay, under the radar a little bit, or at least trying their best to do that. And so with an IPO, it's certainly not a way to stay under the radar. One way around that is to IPO parts of the business, which is what they've been talking about doing, parts of their Chinese business or, other parts around the world that aren't necessarily TikTok in the U.S. But that is definitely, his number one priority and his number one challenge, I think.
What does this mean for Vanessa Pappas, who's been, running TikTok in the interim? I don't know if you expected that she would be named CEO ultimately. I'm curious what your read is on that.
So I'm curious to see if she sticks around, because she has now been passed over for the top job a number of times. First of all, she was the head of the U.S., and then they appointed Kevin to become a CEO. They appointed a position above her. Then when he left, they didn't appoint her as the CEO. They appointed her as an interim head. And now here comes another person along, to now be her boss again. And so the question is for her, why do you stick around when you're continually not going to get the top job?
Interesting. All right, something to continue to follow. And if you haven't checked it out yet, please do listen to Shelley's Foundering podcast all about TikTok. Bloomberg, Shelley Banjo, thanks so much for your insight there. Another story we're continuing to watch, China cracking down on tech companies that are expanding in finance. Regulators have imposed wide-ranging restrictions on the finance arms of 13 different companies, including ByteDance and Tencent. They're using many of the same limits that were slapped on Jack Ma's Ant Group. Meantime, antitrust regulators slapped Tencent with relatively small fines for not properly reporting past acquisitions and investments. All right, coming up, Mickey Mouse, but with masks. We take a look at what's going on behind the gates at Disneyland in California after a year of the global pandemic. This is Bloomberg. It is a big day for Disney fans as Disneyland reopens its California doors after a year of lockdown. But it won't be business as usual just yet, and tickets might be hard to come by. I want to bring in Bloomberg's LA Bureau Chief Chris Palmieri with the latest. So there's a new reservation system, Chris, they're working off of, limited capacity. Set the scene for us. What's it like at Disneyland gates right now?
Well, the happiest place on earth is once again pretty happy. I mean, this is an unusual company. I mean, you had Chairman Bob Iger there, taking pictures with his phone, beaming like a kid. Bob Chapek, the CEO there, raised the flag and gave a little pep talk to employees. People were waiting hours just to kind of be the first to walk in, even though at 25% of capacity, you're probably going to have pretty much a lot of room when you're there.
So talk to us about the new process, the new setup for tickets, the new reservation system, and how that all works if you want to go to Disneyland right now.
Yeah, this is a first for the theme parks. You've got to buy your ticket in advance, reserve a specific park and a specific day. Right now, it's only limited to California residents. And even with those limitations, they've sold out a lot of days. You pretty much can't get a Saturday in May or June right now. There's a lot of days you can maybe just go to California Adventure. One of the tricks people figured out is if you buy a park hopper ticket, which gets you into both Disneyland and California Adventure, costs about $50 more on an already pricey ticket, but then you get to go to Disney later on in the afternoon. So demand is there. People want to get out.
Also, over the last year, the company itself has gone through this major transformation with more of a reliance on streaming, less of a reliance on parks. Do you expect the parks to continue to shrink as a part of the pie going forward, or do we see the equilibrium change?
Well, I think the indication, all the top brass down there today, just how important this business is. When TV was going into transition a few years ago, the parks were delivering almost $7 billion a year in profit. Last year, they lost money. So to have that money come back at a time when they're investing so much in TV, I mean, Disney stock has done terrifically because they've been able to sign up a lot of subscribers to Disney Plus and their other streaming services. But it still costs a lot of money to feed those beasts. And the parks are really, Bob Iger said this numerous times, really kind of the heart and soul of it. There's this direct connection to the consumer, to watch these things come to life, these movies and TV shows. And so it's a very important business for Disney.
So talk to us about what's to come the rest of the year. Obviously, there could be potentially a really big summer travel season. You've got theaters reopening. What are you watching?
Well, on all fronts, we're going to see capacity limits start to rise, so they'll get more people in the parks, and they're going to be busy. I think people, particularly in parks they can drive to, like Disneyland, are going to do quite well. They've learned, we're seeing this in other entertainment businesses, to cut costs, work with less people, and so profits could come back, even more dramatically once the consumer returns. People got a lot of money to spend still, so we're watching that. We're watching, of course, this fantastic transition in the movie business, where you've got a movie like Godzilla that came out. That's a Warner Brothers movie, but it was released online at the same time as in theaters, and it's still done over 400 million in theaters. So if Disney can pull that off with some of its other movies coming out this year that they've held off on, Black Widow, The Eternals, this could be quite a comeback year for them.
Well, and we recently interviewed Jason Kylar about those Warner Brothers hits, and asked about competition from Disney and Netflix. How do you see the content wars playing out between Netflix and Disney and HBO and Warner Brothers, now that production, I would assume, is also reopening?
Well, Netflix has even said that they consider Disney one of their toughest competitors. They've got over 100 million subscribers around the world and continue to be growing. Disney's challenge now is to sort of keep feeding the beast, and that's why they've been putting some of their best movies up online for their streaming customers. HBO has done that, caused a lot of commotion in Hollywood last year when they announced they were going to put all the Warner Brothers releases for this year up on HBO Max. Turned out to be a pretty good idea. They've seen an increase in HBO Max subscribers and not a huge impact on the movie theater attendance. So this sort of hybrid model, we're going to see a lot of experimentation. Those three right now are the ones to watch in streaming, but Peacock, NBC, Comcast product is going to have a nice summer with the Olympics. And we're seeing all kinds of deals now being cut in sports, where things are being able to go on traditional TV and streaming. So it's a really exciting, and for a consumer standpoint, it's a little bewildering sometimes, but there's a lot of choice.
All right. Thanks so much, Chris, for giving us the view from Disneyland. Chris Palmieri, our LA bureau chief, talking about Disneyland's reopening there. Coming up, Twitter shares tumble after fourth quarter digital ad sales disappoint. We're going to hear from Twitter CFO Ned Siegel. Coming up, this is Bloomberg. Twitter shares plunging after the social media company posted a sluggish start to the year in its ad business. But according to CFO Ned Siegel, there's plenty to be pleased about, including a sales gain of 28%. I caught up with Siegel earlier today.
We had a strong start to the year with 32% ads growth, 20% MDAU growth. We had an analyst day in February where we laid out goals for 3 years from now, $7.5 billion of revenue and 315 million MDAU. No changes to those goals. We made good progress this quarter, but we've got more work to do.
So are investors missing something? Is that what you think?
Well, this may be a question of time frame. We feel like we made really good progress this quarter, but remember, 85% of our ads revenue is brand related, and brand got off to a slower start in 2021 than we would have liked. And although it was strong in March, it wasn't as strong in January and February. Direct response and our map advertising in particular was very strong throughout the quarter. It accelerated on a year-over-year basis from Q4's 50%. That just wasn't enough to carry the day. We did come in towards the high end of the revenue guidance that we provided for Q1. And we provided guidance for Q2 that reflects a range of outcomes. The March strength that we saw would reflect the top half of that range that we guided to for revenue for Q2.
So given how much you rely on brand advertising, that means you miss, all of the travel, all of the retail ads that Facebook and Google are cleaning up on, especially as we come out of the pandemic. Do you have the necessary targeting data to do more of that? I mean, how do you change that?
Well, we have really unique signal at Twitter. We know what you care about in the moment that you're on the service, the topic or event that brought you to Twitter, the follower graph of all the things that you want to learn about while you're on Twitter. And that's really powerful for advertisers. It means that if you're Samsung and you're launching the new version of the Galaxy phone, you can run a campaign in 30 countries and have over 100 million impressions where people are learning about your device. If you're Pepsi, you take over Twitter on the day of the Super Bowl every year, and your impression growth was 40% from where it was last year. It's different signal than what you might get from other services. And that's actually great because it means that it's unique in how we can share that with advertisers.
Jack said he hoped to start testing a subscription product very soon. What kind of product are we talking about? Is this a newsletter, and how soon? Well,
you can think of two different examples of where there will be subscription opportunities on Twitter over time. The first is we want to help content creators get paid. There we'll facilitate a transaction. We'll call it super follows. And I could follow Emily Chang, and when she has premium tweets, I would get access to them because I paid the price that Emily set. The second would be where Twitter provides a premium service to somebody who's using Twitter today and seeing ads where they could get access to a feature that somebody else might not, and where they'd pay us for it. We'll test and learn around both of those over the course of this year. I'm excited to see them roll out soon.
Ooh, I'm excited about new possibilities for new Emily Chang revenue. Bloomberg broke a story that Twitter looked at buying Clubhouse at a $4 billion valuation. Of course, you've got Twitter Spaces, but why didn't you do that deal?
Well, we're really excited about the opportunity around audio chat rooms on Twitter. It's a real natural extension of the way people already use Twitter. It's live conversation. It's finding people who care about the same topics as you do, who you may not have known or been able to find if it weren't for this space. It could be around the NFL draft, as we saw Spaces last night. It could be the new version of a show. Netflix did one for one of their series last week. It could be the after party for the Grammys, which you saw last month. These are great examples, and I'm sure we'll see more as well. If you just step back and think about M&A for a second, we always want to be dispassionate about whether we build something that's critical to our priorities or whether we bring in a team or technology or a whole business that helps us better address that opportunity faster. We've bought over 20 companies over the last few years, and we'll continue to be thoughtful about M&A going forward.
Ned, you and I did a Twitter Spaces together. There was quite an audience there. How do you plan to monetize Twitter Spaces?
We'll figure out monetization over time. Right now, we're really focused on just getting the experience right, because what we found since the beginning of Twitter is if you give people a good experience, the monetization opportunities will follow, whether it's sponsorship or tipping or other opportunities. I'm certain those will unfold if we can give you a great experience when you do a space with me again.
And, you know, I know you've repeatedly said there was no such thing as a Trump bump, but how do you continue to add new users and fast, quickly, without that?
Well, we added 7 million MDAU from Q4 to Q1. We added over 30 million on a year-over-year base in Q1. As we come out of the global pandemic, hopefully, as we lap a year where there was a lot of conversation around the presidential election in the United States, it's a great opportunity for people to see all the entertainment, all the sports, all of the investing and other topics that people are talking about on our service. Those are such a really big part of what people come to Twitter for. And they're a great opportunity for people to be a part of a conversation, hear another side of a debate. Remember, the US is 20% of the people who use our service. Politics is just one small part of this broader conversation. There's so many other great things that are happening on Twitter today.
Twitter CFO Ned Siegel there. Coming up, more of Bloomberg Tech, talking about the FANGs next. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Amazon, Apple, Facebook leading the charge this week as tech earnings, for the most part, didn't disappoint. Let's get a roundup for the week from Bloomberg's Kriti Gupta, who's not starting her weekend just yet. One more hit, Kriti. Take it away.
One more hit, Emily. Let's just start off with tech broadly. You did see some selling pressure this week, down 0.6% over the last 5 days, but still up nearly 6%, a whopping 6% on the month. So that's some pretty good news. But let's narrow it in to those big tech names, because really that was the story in the tech space this week. Really those big FANG names coming out with these massive sales beats, these massive EPS beats, but translating into the stock market reaction in very different ways. Amazon, Facebook, Google, very positive reactions on the day and on the week. Apple, Microsoft, not so much. So let's just look at what they did on the sector basis when you break it down in terms of the S&P 500. Remember, some of these names are actually supposed to lift the S&P 500. Instead, they did a little bit more damage in terms of a sector basis. Technology, that's where Apple, Microsoft really fall. You can see that 1.6% average reaction, on that earnings. And then on the upside, the communication sector, where Google, Facebook, those are really those stocks that took the S&P 500 higher this week. It's really interesting to see that massive divergence, Emily.
All right, Kriti, thank you. Now you can go start your weekend. Have a good one. I want to get a little more granular now on the tech earnings we saw this week. I'm joined now by Lee Drogan. He is the founder and CEO of Estimize, a financial estimate crowdsourcing website. Lee, always good to have you here on the show. You do a lot of your own modeling. You have your own targets. What's the big takeaway, your big takeaway from tech earnings so far?
Well, look, across the board, they've been unmitigatingly amazing. Now, obviously, we're dealing with a comp from last year's quarter here that is relatively easy to beat. So you're going to see some artificially high growth rates there. But what we're more looking at here are two things: how the stocks are performing in the pre-earnings period relative to the consensus trends in that period, and then how the stocks are performing the post-earnings period. And what we're finding here this quarter is that the alpha models that we provide to our quant clients that look at the changes in consensus in that pre-earnings period and the delta between the Wall Street and the estimated consensus have done incredibly well, while the post-earnings models, which just look at that surprise, have not done that well. And what that tells us basically is that the market is looking at these huge surprises as relatively transitory in terms of the fundamentals of the business. They're not looking at these as massive read-through to the future of the business. But what we're also seeing is that the out-quarter estimates on estimates from the buy side are getting really stretched from the Wall Street numbers here at this point, to the point where we haven't seen this in a very long time. So what we believe is that it's not necessarily transitory, that a lot of this increased revenue growth is going to stick. And if it does, these stocks are still, in a sense, undervalued.
Interesting. I want to hone in on the ad market, because obviously we saw Facebook and Google blow it out of the water. Then Twitter shares plunging 15%. We just heard from the CFO, Ned Siegel there. What's happening?
Look, I mean, the economy's on fire. Something like Google, there's a joke out there that's not so much of a joke, that Google does its best to kind of keep its take rate, kind of within a small band each quarter to make sure it doesn't really upset regulators, and they weren't even able to come close to doing that this quarter because there's just so much money flowing in. And e-commerce has just done so well that they weren't even able to kind of keep that in check, lower than they wanted. I don't think that's going to change here, considering the directionality that we're seeing in the expectations. A similar thing happened to Facebook. And I think we're going to see it across the board when the rest of these e-commerce companies report, because, the read through from Google is just amazing.
So do you think that the momentum that these companies are seeing now is going to stick? I mean, what happens after the economy is open for a few months? Then what?
Right. So looking at some of the other sectors, what we're seeing is the expectations for consumer spending over the summer are going to slightly shift. But the real question is, in the long term, does the e-commerce versus kind of in-person retail mix, how much does that revert? And that's kind of been the question all pandemic, trying to figure that out. I think that's playing out in some respect right now with Peloton. The stock doesn't look very good. They report in a couple of days. There's a lot of, nervousness around that one. Personally, I think that one could round trip. Because that is a name where you could see massive flow just back into experiences and away from hiding in your home. But on the other hand, when we look at Shopify and we look at all of the other names that are just directly e-commerce driven and away from in-person retail, we don't see it giving too much of that back. And so I don't think this is transitory. I think, this is here to stay, and these names deserve the high multiples that they're getting because the growth rates are going to be huge.
I want to transition to Bitcoin. We've got Bitcoin back almost to 57,000, but when you look at Coinbase losing some of its momentum in trading since the direct listing, what's happening there?
So there are the cryptocurrency ecosystem is moving so incredibly quickly right now relative to, let's say, a year ago. A lot of projects that were being built over the last couple of years have come online now. And especially in the DeFi space, what we're seeing is platforms like Uniswap eat into the margins, eat into the market share of Coinbase. And you also have Binance, which is the 1,000-pound gorilla as well. And I think when people look at Coinbase in the public markets, they tend to see AOL. They tend to see something that was an incredible platform to onboard people to a new ecosystem But is it really going to be the thing going forward, or are we in an AOL and Netscape versus kind of Google and Facebook environment? And that's what I tend to believe. And so as we see a lot of these other projects, go ahead.
Hang on, you think Coinbase is the next AOL?
I have a strong feeling that Coinbase could be the next AOL here. That Coinbase basically has a choice. They can end up like AOL or they can end up like Facebook. And the reason Facebook is Facebook today is because they took their stock and their balance sheet and they bought everything that they possibly could that they thought was a threat. And they did an incredible job at that. You can put Google in that category as well to some respect. Coinbase is going to have to do the same thing because there's so much innovation coming down the pike, and their transactional model is not going to get the multiple that it does today as their growth rate slows and other competitors take market share. So they can choose to use that and invest in all sorts of VC projects and buy companies that become a less transactional model, or they can stay what they are and they're going to end up like AOL. I think, my view is a little bit tinged with some hope as well that they do end up like AOL and not end up like Facebook, because I'd like to see the cryptocurrency ecosystem be more distributed than, in one hand. But I really do believe that it's going to be hard for them to end up like Facebook.
Interesting. That is quite the call, Lee. We're going to have you on as we watch progress or lack thereof. Lee Drogan, CEO and founder of Estimize. Thanks so much for stopping by. All right, coming up, the data amid a COVID surge for cloud providers. We'll talk succession and shuffle with one executive at the heart of some big moves in the cloud. This is Bloomberg. In a pandemic world, there's been a premium on data and surge in demand for the cloud. So when Amazon hired former exec Adam Selipsky to lead its cloud unit from data analytics company Tableau, the market saw a perfect fit. For Selipsky, it is a homecoming. He was Andy Jassy's right-hand man at AWS before joining Tableau. For Tableau, it means a change at the top, too. When Salesforce bought the company in 2019 for more than $15 billion, it was heralded as a transformative deal. Joining us to talk about all of this is new Tableau CEO Mark Nelson. Mark, thanks so much for joining us. So what does Adam heading to AWS mean for Tableau, and what are your priorities in this new role?
Yeah, so here at Tableau, our mission has always been to help people see and understand data. And we're at a point in time that is just amazing for this mission, right? We have so much data around, and the tools to look at it and see things is nothing short of a new microscope or telescope. It's the ability to see things in the world that have always been there, but we've never been able to look at it. And our mission is really to make sure that that power is at the fingertips of everyone who wants to do it. It's now in every walk of life. It's more important to be able to answer questions using data and being able to use this new tool to make decisions empirically, faster, and in a more accurate way. And that's the mission that we're on.
Adam leaving, though, is that a big loss? And what does Amazon gain?
So Adam is great. Adam hired me into Tableau, and so I've learned a lot from Adam. It's awesome. I'm sure he will be great for Amazon, as you said, he helped build that business. And we're excited on our journey and my journey as we go forward from here.
Is there an opportunity for Amazon to work with Tableau now, given your relationship?
For sure, there already has been. Certainly Adam has been here and brought with some connections to Amazon when he came. We have great partnerships with Amazon and all the cloud providers as well, because there's an amazing data landscape out there, and the cloud providers have really been providing amazing abilities to put your data out there in such a way. And so it's more important than ever that we partner with all of these providers, because this is where people's data is going, and we want to be able to work with people's data no matter where it goes.
Now, analysts said it was absolutely transformative when Salesforce bought Tableau, pitting Salesforce against Microsoft. What has the acquisition been like? Has growth panned out in that way?
Yeah, the combination of Salesforce and Tableau has been amazing. It's really like bringing peanut butter and chocolate together, right? You're bringing together these two amazing things that are better together. Bringing together the amazing customer 360 set of applications that Salesforce has, the most amazing business application platform on the planet, with Tableau, which is, we're the best tool to be able to see and understand data. And those applications are built upon and generate some of the most valuable data for every business. When you combine that with Tableau, it lets you understand that data, get insights from it, make decisions in a faster way. And certainly what we've seen in 2020, that is an existential thing for businesses, to be able to understand what's going on in their business, to be able to react to it and make decisions real time is invaluable.
Tableau has, I believe, more than 86,000 customers, ranging from Netflix to Verizon. Talk to us about what spending looks like on IT in the current environment, and especially as the economy reopens. How are the sectors that were hardest hit responding now?
Yeah, we see the economy coming back very well. And what we've seen really through the pandemic is this is just an amazing push for a digital transformation, right? Companies are figuring out they have to be agile and they have to be digital today. And at the heart of every digital transformation is a data transformation. You have to be able to see and measure and understand what you're doing as you move into this digital world and make decisions very quickly. So we see that combination being amazing, both for Salesforce and for Tableau, as the economy continues to recover out of the pandemic.
All right, Tableau CEO, Mark Nelson. Good to have you on, Mark. We'll be watching the moves you make. Thank you. Coming up, when it comes to TikTok, we've heard a lot about the US-China tug of war over data and privacy, but Russia is also increasingly affecting the social media platform, muting some users. We're gonna have a first-person account next. And as we head to break, stock performance this week, a mixed bag for chip makers. Two words seem to dominate earnings for Apple and Qualcomm, which both reported this week. Those words, supply constraints. We're going to keep our eye on the semiconductor space. This is Bloomberg. TikTok, owned by China-based ByteDance, is among the global social media companies coming under increasing pressure to remove anti-government posts in Russia. This as President Vladimir Putin cracks down on dissent. Bloomberg's Marish Kabas spoke to a creator who says his posts are being censored.
With the fines being introduced to TikTok, I think this is going to be changed. I think TikTok is now more restrictive on political videos.
The Russian government says clips like these mobilized youth to take part in the Navalny protests this year. So it has fined TikTok after asking the platform to remove content.
They aimed to block Telegram in 2018, and from then on there has been steadily growing their effort to control the internet.
Misha is a TikTok blogger in St. Petersburg with over 8 million views on his TikTok. His videos on the Navalny protests went viral.
I have like 30,000 people on Instagram, more than 200,000 people on TikTok. So I do that to enlightening people into political science, social sciences.
His main goal is to inform people on topics he feels are often twisted online.
There was a bit of misinformation because the protests, they were quite a big thing, and a lot of misinformation happened on these days. People were saying that people are going to be shot on the streets, that the policemen are going to shoot people. And so I was also just showing political examples from other countries of how protests work, and mostly again using political science on the protests, explaining different phenomena and how protests work in general.
Назови хоть одну страну, в которой митинги хоть что-то поменяли. Окей, Южная Корея, 2016 год.
Well, there is no social media right now that would give you such a possibility to get as many views as on TikTok. First is algorithm, and the second is that just TikTok gathered a specific kind of culture on there.
Recently, Misha says his posts on TikTok have been removed or modified.
Well, it's there is more to that. There is this thing called talent program for development of the bloggers on TikTok. And after everything happened with Navalny and my videos been covering the events, I received a message that I'm being expelled from the program. And the reason was, I don't think they were planning to tell me the reason, but we were talking with the guy on the chats, and he actually told me that I'm telling my opinion.
In some cases, the sound was cut off. In other cases, they were taken down altogether. So could you please tell me a little bit about that, and if it's something that's happened before?
So the videos that been taken, the sound of which was taken down was about Biden. So there was this thing about Biden saying Putin's a killer. So that was just funny, and I was talking about that, and then I actually explained a bit more of what Biden was talking about. So I don't again understand what was the reason for the video's sound to be taken down.
And do you feel that people are increasingly more scared of voicing their opinions online?
Yeah, that's for sure. That's for sure, because that's the government policy and they're doing it just fine. And myself included, because I've been self-censoring myself. I took down some of my videos just because I was afraid something can happen to me because of those videos. And there was nothing illegal about them.
The Kremlin solved the issue of anti-government content on TikTok by talking to Chinese leadership. Increasingly, posts like Misha's started to disappear as influencers realized anti-government clips can harm their traffic. But this isn't as easy with other networks like Twitter, so the Russian government decided to slow access to the site. Censor Planet, based out of the University of Michigan, has been tracking exactly how and why this is happening.
First, they chose blocking, outright blocking. But for high-profile websites, blocking creates a negative persona in the eye of Russian citizens, in my opinion. And it's something that they don't want to go there. So they came up with next best. First, we're going to throttle you. We're going to slow down your traffic, and you better listen to our list of demand. And if they don't, I think ultimately they end up blocking them. In the case of Twitter, unfortunately, the throttling ended up being a successful maneuver by the Russian government and got Twitter to come to a negotiation table. So I think that is going to be the strategy they will keep using. I haven't seen any country that successfully deployed throttling as a means of censorship technique. This is the landmark event for the censorship community.
Part of the reason that this is a landmark event is that it requires control over a decentralized network.
The Russia's censorship architecture, which is now centrally managed on top of a decentralized network, is a blueprint and show how national censorship policies can be implemented in many other countries. And to me, that's really a slippery slope that these countries are stepping into. It's not a hard thing to do. Actually, that's the fear.
Wow. All right. Bloomberg's Modest Kabish there. Something to think about. And that does it for this edition of Bloomberg Technology. Coming up next, we've got Bloomberg's Wall Street Week. My colleague David Weston and his guests will be talking about President Biden's joint address to Congress, as well as the catastrophic second wave of COVID-19 happening in India right now. That is next. This is Bloomberg.